Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. This is our next video in our series on building and optimizing financial guidance as a public company. And in this video, we're going to talk about building the inputs of your financial guidance. And remember, guidance is the translation of your day-to-day operational finance detail to the summary level that's consumed by the capital markets. And when you're building guidance, there's two primary inputs. It's your internal forecasts, your internal budget, and all of the scenarios that you have running. And second is sell-side consensus. So let's walk through how you build each of these inputs and sort of where you get them. So input number one is your internal operational finance data. And what you need to do is, again, start by collecting all relevant data and scenarios. This is your internal budget, the high and the low equals the range, your internal forecasts, the high and the low equals the range, and then any other scenarios that might inform the global level of your financial statements and the guidance you need to give to public company investors. And what you want to do is a relative comparison of these ranges. And by knowing how the budget and the forecast are tracking relative to each other, this is what's going to allow you to contemplate a range that's large enough so that you don't have to change or minimize the change needed to your guidance. The second input is sell-side consensus. And where you're going to start here is you're going to build a sell-side consensus estimate football field. How do you do this? Well, the data source is FactSet, which I think is the best one, or S&P IQ, depends on what you have. Number two is the data sets, the number of analysts covering you, and all of their estimates for a given metric. So you're going to have a tab for revenue, a tab for adjusted EBITDA, or a grid and a spreadsheet for revenue, adjusted EBITDA, and whatever other metrics you're giving guidance for. And what you want to do is then have a relative comparison of your internal data to sell-side consensus. And this is what's going to allow you to create a range that is wide enough to minimize change, but also send the optimal direction to investors around valuation. And so the other piece to think about here is that there are 4 time periods that you need to consider as you're building your internal forecast and your consensus data. And that is the current quarter plus one, so the upcoming quarter, the current fiscal year, and then the fiscal year plus one, or the out year. And if you can manage expectations around these 4 time series, you're going to have a lot of control of your valuation. So let's get to guidance and valuation. Remember, the range is the directional trend of your internal business, what you're trying to communicate to the capital markets, and the direction of the guidance you give relative to expectations, sell-side consensus, is what's going to drive the stock up, down, or flat. And then knowing number one to number two, the internal versus the external over the 4 time series, that's what gives a company true valuation control of their stock. And what's really important to remember throughout all of this is that sometimes vague qualitative statements can drive the greatest value benefit for the company. When you think of out years or years where you haven't given guidance, if you can just give a vague statement of be conservative, we haven't modeled that out yet, that is good enough to manage expectations. Thanks for watching.